Hey everyone, welcome back to The Explainer. So, you've been watching the markets lately, right? And maybe you're thinking, man, the artificial intelligence gold rush, it's totally over? Well, I am here to tell you, and not even close. The AI revolution is far from over. Today, we are bypassing all that daily noise and the absolute peak hype because we're looking for real tangible value. We are looking at 5 companies that are delivering explosive AI-driven growth right now in late May 2026, and they're doing it while trading at a serious discount compared to their massive long-term potential.
Look, if you've been watching names like NVIDIA just grab all the headlines while literally every startup out there pitches an AI toothbrush or whatever and pushes for absolute peak multiples, well, it is completely natural to feel like you missed the boat. You know? It's incredibly frustrating to sit on the sidelines and just watch those charts go completely vertical. But here's the reality of a multi-year megatrend like AI. The initial wave of hardware hype, that is just the beginning. The real generational wealth is almost always built in the secondary waves. We're talking the infrastructure, the software, and the memory that make the whole ecosystem actually function.
And honestly, that is exactly the core premise of today's explainer. We are comparing the pure AI hype, the stocks priced for absolute perfection, against hidden value and strong fundamentals. We're going to count down 5 fundamentally strong alternatives. We're looking for real business modes, future growth catalysts, and actually reasonable valuations. Now, just a quick but super important reminder before we jump into the numbers, this analysis is strictly for educational purposes. It's not financial advice, guys. Always do your own research, because as we all know, markets are volatile.
All right, let's dive right into this countdown with our number 5 pick. This is SoundHound AI, representing the voice sector.
Think about the last drive-thru you visited, or maybe the smart assistant in your car that actually understands the context of what you're asking. Well, there is a really good chance SoundHound is the engine powering it. To understand why they are so compelling, we kind of have to look at the massive shift toward what we call agentic AI. We're moving away from those old systems where you just type in a prompt, right? We're moving toward autonomous systems that use voice as the natural primary interface to interact and actually reason on your behalf. And SoundHound's competitive moat is pretty amazing here. They aren't just some pure-play startup desperately searching for product-market fit. They already have massive commercial traction and deep partnerships in the automotive, restaurant, and IoT spaces. And you know what? That traction is translating directly to the top line. SoundHound recently reported really strong Q1 revenue growth, over 50% year over year. That's largely driven by their Houndify platform. So analysts are looking at this early-stage adoption, and they're seeing the potential for continued triple-digit growth in the coming years, especially as conversational interfaces just become the absolute standard everywhere.
Let's look at the scorecard for SoundHound. As we said, growth has triple-digit potential. On the valuation side, it's been trading around $8 recently, which puts its market cap in the low billions. Now, they don't pay a dividend yet because this is purely a growth story. The main takeaway here is that, while they are still unprofitable right now, the forward multiples look highly attractive when you consider their growth trajectory. It's basically a high upside exposure to voice AI, but without those sky-high valuations you usually see with big tech.
Moving right along to number 4, we have UiPath, the absolute leader in AI automation.
Now, this is a company masterfully turning AI hype into tangible, scalable workforce productivity. UiPath is the absolute champion of robotic process automation, or RPA. Historically, this just meant software that automated repetitive enterprise tasks using basic bots. But today, UiPath has supercharged this whole process with generative AI and agentic capabilities. They're integrating large language models so their intelligent automation doesn't just blindly follow rules anymore, it actually reasons, it adapts. And while everyone else is out there talking about flashy, theoretical AI models, UiPath is out there actually saving enterprises massive amounts of time and money right now. They're successfully moving companies from these small pilot programs to fully scaled, ROI-focused deployments.
And guys, the total addressable market for this is just staggering. We are talking about literally trillions of dollars in global labor automation potential. Let that sink in. As hyperscalers and massive enterprises really ramp up their AI spending, the demand for practical, money-saving AI tools like UiPath's platform is expected to accelerate dramatically.
Checking our scorecard for UiPath, analysts are projecting solid double-digit revenue growth alongside expanding margins. And from a valuation perspective, it's frequently cited as one of the cheaper AI software plays out there. It's trading at a noticeable discount compared to its peak valuations from earlier AI waves. Again, no dividend here, because they are reinvesting everything into capturing this massive market. But it's a fantastic play if you're looking for strong recurring revenue and improving profitability.
All right, let's keep it moving to number 3 and see how this builds.
We have Palantir, specializing in enterprise platforms. So, for a really long time, Palantir was basically known as this secretive software provider for government and defense contracts. But recently, they have exploded into an absolute commercial AI giant. The crucial piece of the puzzle here is their artificial intelligence platform, or AIP. Palantir isn't just selling you some off-the-shelf software tool. No, they are embedding their system deeply into the high-stakes operations of their customers, whether that's in healthcare, finance, or defense. Their moat is this deeply complex data ontology and integration capability that is incredibly hard for any competitor even attempt to replicate.
And the adoption of this platform has been nothing short of breathtaking. I mean, look at their stellar Q1 2026 results. Their U.S. commercial revenue surged over 120%. Overall revenue was up 85% year over year. This hypergrowth is being heavily driven by their really unique bootcamp model. It basically rapidly shows commercial clients the exact, undeniable value AIP can bring directly to their specific data.
On the Palantir scorecard, their growth is categorized by the elite rule of 40. For those who don't know, that means their combined growth and profitability scores are absolutely top tier. Now, to be fair, their forward PE valuation is definitely elevated, which makes them one of the pricier names on our list today. But honestly, when you are executing at this level, with expectations of sustained 30 to 50% growth as AI just becomes table stakes for large businesses, that premium pricing is pretty well justified.
Ramping up the energy for number 2, we have Broadcom, the absolute giant of AI infrastructure. See, while other companies are busy building software, Broadcom is out there physically building the necessary infrastructure for the entire AI revolution. If AI is a gold rush, Broadcom is basically the one selling the most advanced picks and shovels on the planet. They specialize in custom AI accelerators, which are known as XPUs, alongside advanced networking components. We're talking specialized silicon chips built explicitly for hyperscalers like Google and Meta. These massive tech giants have such unique, massive networking and compute needs that standard, off-the-shelf chips just can't always handle them efficiently. So Broadcom partners with them to build the exact custom silicon their massive data centers require.
And honestly, the scale of this operation is almost hard to comprehend. In just Q1 of fiscal year 2026, Broadcom's AI revenue hit a massive $8.4 billion. That is up massively year over year. But even more impressive, they have a crystal clear line of sight to generating over $100 billion in AI chips by 2027. Hundreds of billions in capital expenditures are just flowing from the hyperscalers right now, and Broadcom is perfectly positioned to capture a huge share of it.
Looking at Broadcom's scorecard, analysts are seeing strong double-digit to 40+% growth in their key segments, and the valuation is actually really reasonable given that growth. They're trading around 30 times forward earnings, which is surprisingly cheaper than a lot of the pure AI plays out there. Plus, they actually offer a dividend yield around 0.6 to 1%. So this is a highly diversified, high-quality compounder that brings a really nice level of stability to an AI portfolio.
Okay, now to really understand our number 1 pick, we have to look at the logical progression of the AI build-out, right? Step 1 is securing the raw compute power. Step 2 is building the physical and networking infrastructure to handle it. But once you have those pieces in place, you hit step 3, scaling memory. Memory becomes the ultimate unavoidable bottleneck, because if AI needs massive compute, it needs even more memory to actually feed data to those processors.
And this brilliantly illustrates our number 1 pick, Micron Technology, the absolute top memory play. Micron is quite literally the bedrock enabler of the AI boom. Think about it. Without advanced memory, the most powerful AI chips in the world essentially just sit idle, waiting for data. The magic word here is high bandwidth memory, or HBM. This is the critical, non-negotiable component required for advanced GPUs to function. The data center AI build-out has created this incredible multi-year structural tailwind for this technology, and it's pushing margins to industry-leading levels of over 60%. But here is the absolute kicker. Micron's HBM supply is currently sold out or highly contracted all the way into 2026 and 2027. The demand is absolutely insatiable right now. Now, despite delivering exceptional recent performance with huge revenue and earnings beats, Micron's forward PE ratio sits shockingly low. We're talking often in the low teens or even single digits on some analyst estimates. This is far, far below its AI peers and the broader market. Let's finalize this with the Micron scorecard. We are looking at expected earnings per share growth in the hundreds of % in the near term, but the valuation is incredibly cheap in the low teens. This means its PEG ratio, which measures value relative to growth, absolutely screams undervaluation.
It even pays a small dividend. So it's the standout value play because it perfectly combines the critical necessity of an AI enabler with a valuation that simply does not yet price in its full upside potential.
So there you have it. SoundHound for voice, UiPath for automation, Palantir for enterprise platforms, Broadcom for infrastructure, and Micron as the ultimate bedrock memory play. These companies prove that you don't have to chase peak hype to find incredible AI opportunities. But I want to turn this over to you. Looking at the fundamental moats we've unpacked in this explainer today, from custom silicon to high bandwidth memory to agentic AI, which of these 5 companies do you believe actually possesses the biggest, most disruptive runway for the next decade? Think about that, keep focusing on long-term fundamentals over daily noise, and I will see you in the next explainer.